stop doing that. Y'all gotta stop doing that. I was washing some clothes and I heard my name, and then next thing you know, I fell through a portal. And now I'm here. Hey, what's going on, y'all? It's your man, Rick Dawn. Hey, you know what time it is? I got a new one down the pipe. And before we get started, thinking cap, please. Yes, sir. Yes, ma'am. This episode is brought to you by wordy.com. You have to check it out. That is my social media site. It is brand new. It's beautiful, nice, polished. And, shout out to the first person who creates a Wordy account. I greatly appreciate you. In fact, if you create a Wordy account, I will give you a shout out on the next episode. All right, we will jump right in. Why not? And we will be using wordy.com, of course. All right, we're going to click create a word. Let's get comfortable. And let's throw that in there. Here's the stock I'll be looking at today. Aptinyx, I believe it's called. And I do apologize if I butchered that name. I'm not sure. And let's jump in. Let's not waste any time. All right, right now, this stock is trading for 15 cents after hours, but it closed during the business day at 0.143. If you are here just to get a quick look and, quick little bit of information on whether or not you want to actually invest here we go. It looks like it was, doing fairly well for a penny stock, trading at about 40 cents. And then it had a huge surge somewhere about right here. And that was on the 12th of December, 2022. And then it had a nice jump, came back down, a huge jump. And it did pretty well up until February 26th, in which it had a huge drop. And we have to take a look at what news came out on the 26th to help us understand why investors ran for the hills. Was it a reverse split, a public offering? We will find out, because that is the entire purpose of this particular series. But let me just go ahead and just put it out there. I love what I see, and I'll tell you why. And I'm very optimistic here. I'll tell you why I'm very optimistic. It's because it did very well. It was doing decent, and it even peaked at, what's this here? 67 cents. That's nice for a penny stock, real decent. And I believe that this drop here is only temporary. I believe at some point, just based off of history and my knowledge of this particular concept and investing and over the years, I think this is temporary. I think this stock will rebound because it has a decent history of being above its current selling price. Currently, it's trading at 0.14 cents, 0.143. That is not going to stay that way for long because the track record shows it. Right now, this is only this is not much information to go off of, but it's certainly enough for me to make a hypothesis and say that I do like what I see. So in terms of my preliminary opinions and guesses, I'm going to say that this stock is going to definitely be one that I will test and try out because it's just a lot here. But of course, there are things that will change my perspective depending on how things flow. Now, I'm going to start off with a plus just to be nice and fair. And here we go. Let's jump in. Let's find out more about what's going on with this company. All right. So first off, I want to take a look at the PE rate. No, not the PE rate, the market cap. All right. 9.68. They're not showing the revenue for this company on this website, so we will figure that out on our own later. Right now, we can definitely see here trading at 15 cents after hours. So it had a nice 4% spike, was down 10% on the day. I like jumping into companies on down days. I don't like jumping into a company that's doing well for that day or for that week. I like to jump in when everybody is running or when the stock is not doing so well because, again, I'm a wave investor. For those who don't know, I am a wave investor. I like to jump in while the waves are real calm or the waters are calm. And then right as that wave spikes, I want to be a part of that spike. And I want to sell at what I would argue is the peak right before it drops back down because we know that waves don't last forever. So that is my style. If you're not that type of investor, you might not want to be here because I'm here to take advantage of stocks at the bottom of the barrel. You might be wondering, why do I continue to analyze stocks that are trading at 10 cents, 11 cents? Because those are the stocks that are very cheap. You can get in and you can buy a lot of shares. It's like taking $1,000 to the dollar store, and in this case, the penny store, right? And you can buy a lot more and get a much bigger bang for your buck, a lot more value. When you're buying into Amazon and buying into Google, those stocks are very expensive. So we try to find the stocks at the bottom of the barrel. For those people who invest in me by a subscription or subscribing to my channel, they understand this concept. We try to find stocks at the bottom of the barrel that are like diamonds in the rough. And we invest in those companies with the hopes that, hey, we can be a part of a spike and then get up out of there. You won't see me investing in many of these companies that I'm reviewing on the Becoming Ritchie Rich, this little series. You won't see me investing long term in these companies because it's all about the get in and get out. Okay, you don't see a surfer surfing on a wave forever. You see it, then it's gone. And we try to, pay attention and catch those moments. All right. Anyway, here we go. Let's take a look at some more stuff here. That is one aspect of what I'm looking for today. The profile of this company. Let's figure out what this company does. All right. Aptinyx Incorporated is a clinical stage biopharmaceutical company focused on the discovery, development, and commercialization of synthetic small molecules for the treatment of brain and nervous system disorders. Beautiful. I love it. I love investing in companies that seem to have a decent model or a decent goal. Helping people. I love those kind of companies. I'm a big fan of pharmaceutical investing. If you don't know that, I am. And the company is targeting and modulating N-methyl-D-aspartate. Don't judge me. All right, which are focused on brain and nervous system. So this is a company that seems to be focused on the nervous system, brain development, things of that nature. I do have a personal stake in that particular brand, and there are 40 employees. So this is a relatively small company. They are in the healthcare sector. All right, not bad things at all. So let's keep looking though. That's just the tip of the iceberg. Looking at the financial summary for the third quarter, the company reported a net loss of 15 million compared to 21 million a year ago. Basic loss per share from continuing operations was 0.23 compared to 0.31 a year ago. All right. Well, here we go. Net loss was 52.8 million compared to 55.28. So a lot of losses. And when we look at the return on investment, there's the confirmation of those losses. Investing in this company could net you a negative 60.6%. And we saw that drop. And I believe that drop took place on, February 26th. So we will find out exactly what took place on that day and why that drop happened. But again, for those who are, accustomed to this particular series, we know that penny stocks typically have a negative return on investment. So that is not news that scares me particularly. All right. And as far as PE ratio, I like to see 25. This is a negative 47. So I'm going to argue that this company is not necessarily the best place to be based on the industry itself, or I should say the industry itself is not doing so well right now. All right. Next, no dividends. Of course not. All right. And this company is not showcasing any revenue or anything like that. We will have to do our own digging to find what their revenue is. For whatever reason, investing.com is just not showing it. I'm not sure if that's a good thing or a bad thing, but we will see if we can discover that on our own. And if we look at some technical analysis and we use the computers to do our homework for us, we see that it's neutral on technical indicators, which is good to me. Usually there's a strong sell in both spaces, but just to see a neutral is like out of the ordinary. So that's semi-positive. And here we go. This is what I'm used to. Strong sell for day trading, for weekly trading, as well as for monthly trading. I'm going to just put it out there. I think that huge drop that happened sometime in February absolutely just disintegrated this company's, algorithmic. Is that a word? Algorithmic? Don't judge me. All right. I think that I would argue that huge drop sent negative vibes to the algorithms. I think that when that happened, any technical indicators, any computer-based indicators, just like we're out of it. But if you're a human being, you can look through the peephole. You can find the little nuances that make a company tick, and that's what we're looking for. So strong sales across the board, not necessarily surprised, but now you know what must happen. We must look at the historical data. Again, these are the things that's going to give us, real price points and help us figure out exactly what's going on. Now, here we go. I want to go straight to it. I don't want to waste time. There it is. There is the Behemoth. That happened on February 28th, okay? Not the 26th, it was the 28th. Look at this gigantic drop. Had a huge drop, 66% drop. Now, you know what that means? It can mean a couple of things. It can mean that this company is having some really, really hard times right now and is on the cusp of being delisted and going over the counter. Or it can mean that some investors are making some huge mistakes that we're going to capitalize on. And this is the perfect time to tell you that I am not your financial advisor. This stock can go the way of the dodo bird. So if you invest in it, you're doing it on your own or at your own risk. But back to what I was saying. Listen, if it dropped 66% and everybody ran, you and I know possibly that that's the perfect time to get in, right? When everybody starts to sell off, people like us can come in and buy up the place. And it's kind of like real estate. Sometimes people sell their property for whatever reason, and then the city or the area might go down and things might get pretty bad. But then tycoons like you and I, we come in with our money and we buy we buy that space and we hope for the best. That's what we're doing today. All right. We're going to utilize a little bit of what Warren Buffett does, that last smoke strategy, meaning we buy companies that might be on a down and out and we buy up the place in hopes that it has one more run in it. And it's very, very risky. So, I'm going to caution you and just say, hey, this could go wrong. All right, you want to have some expendable cash. You don't want to spend your last on something like this. This is dangerous work we're doing. But if we can just get in right now and that this company has that last run and just takes off. Money, 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 money. Money. Anyway, don't judge me. Now, look. Let's ignore that just for a moment. Let's take a look at this area down here. You know what makes me very happy? Let me tell you. Right here. The high is 60 cents. Yes. Yes, I am getting good vibes. All right, I'm going to just go ahead and just be honest, though. This stock has a lot of problems. We're going to drop it down to a B+. It has a lot of problems. But we're not trying to invest in this company long term. Not necessarily. We're just trying to make some money real quick. All right, I know. But don't judge me. All right, look. Here it is. The high is 60 cents. And you know what's beautiful about that high? Is that right now it's trading at 14 cents. That would be the equivalent of finding a item that was selling at $60, right? And for whatever reason, it dropped down to $14. And then you go and buy thousands of that, right? And then, you go and sell it online for $30. It's still a profit. It might not go back to 60. It could surpass $60. I saw this particular maneuver on like Amazon videos where you had people going to the dollar store buying these pretty decent items which had higher value. They were buying those items and then they were going to the dollar store and buying those items. Then they were going to Amazon and selling them for a profit. That's kind of what this play might be. We're going to get in at 14 cents, 15 cents even. And, we're going to kind of wait and see what happens and possibly be able to sell this thing for 30 cents, 40 cents, 50 cents, and even better, $1. We'll see. Okay. So this is a value stock. If I've ever seen one, you're buying it for, it's undervalued. If I can put it that way, it's very undervalued. Some people may not understand the value of this particular company. Now, so the lowest 12 cents. So that means even if you got in right now, you're almost at the bottom of the barrel. That means we're super close to where we want to be. It's always best. I won't say always best. I'll say it's often best to, if you're going to get into a penny stock that's not doing so well, you're using a wave strategy like I do or invented. I'm not sure. Don't judge me. All right. But if you're using that strategy, it's always best to catch the bottom. You want to find the bottom of the barrel. You don't want to catch it when it's surging and it's traded for 21 cents all of a sudden. You want to catch it when it's had a rough day and it's on its bottom legs, because that's when, that's the time to get in. Right. So it's almost at the bottom of the barrel, but it's not quite. OK, so even if you get in at 15 cents, you won't see much loss if it drops to 12.7. It's just not going to be a lot of loss there because we caught it at the low, right? Now, here are these people who invested in this company on February 21st. Look at this. They got in at 52 cents and now they're down all kinds of money, right? They're down. But we're taking advantage because we're getting in later and we'll get in at 14 cents rather than 52 cents, 60 cents, right? So, and then the average is 25 cents. You want to know what's so good about that average? It basically means no matter what happens, you're going to make some money. And I say that very cautiously, okay? Because I've been wrong about this thing before. Let me just get it out the way. I don't have a perfect record when it comes to investing. In fact, I've been doing better because one company did really, really well. But, since the Democrats have been in office, man, I don't know what it is. I just don't like investing when Democrats are in office. I am all but certain that I will be I'm not investing, but voting Republican, this coming election on the basis that the economy does better. And, I think it's good to buy up a lot of stuff when Democrats are in office, but when they leave, that's when you make your money. Republicans, a lot of these stocks, they do so much better when the Republicans are in office. I just noticed this. This is something I've noticed. And I don't know what it's about. I don't know why it is the way it is. It's like, I like what the Democrats try to do in essence, but I hate what they do with the money. They just don't handle the money correctly. So, and then with the Republican side, sometimes they forget about the little people, which is another problem all in of itself. But at the same time, the economy thrives. So, it's right there. I wish we had like a purple party. It takes the best qualities of the Democrats, the best qualities of the Republicans, and just meld it together. We don't have that. But anyway, nevertheless, they say never talk about politics and religions, and I just kind of did that. I just did it, right? All right, but I like the average because just about no matter what happens, right, you're going to make some money, theoretically speaking, because you're getting it at 14, 15, 60 cents. You never know what this thing will be trading at tomorrow. Like right now, I'm actually doing this review on March 22nd at 6:16. So the market's been closed. The aftermarket has been closed for about 16 minutes. So tomorrow morning, who knows? I'm going to say, just put it out there. There's no way this thing goes lower than 0.127. That's not happening, okay? That's just not going to happen. Now, I do see it probably jumping up, and don't quote me on this, of course. This is a hypothesis. I do see it going up to about 16 cents between now and Friday. Maybe, all right? We'll see. Anyway, and if you get in at 15 cents, that's some profit right there. You can sell off, but who would sell with a 1 cent gain? Who would do that? Really? All right. But anyway, I like the average. I love the high, right? And I like the low. The low is not terrible. And I can go even further, but why? I feel like I have enough information here to make me happy. It makes me happy just seeing this alone. And I am prepared to leave the B plus in place. Now let's take a look at stock splits. And let's see if this company has any. The answer is no stock splits. But as you know, if you've been watching this series with me or partaking in this series with me, let's take a look at a secondary source. And even the secondary source is showing that there are no stock splits or reverse splits. That warms my heart and makes me glad. You want to know why? Because it tells me that this company, it's like they're probably falling on bad times and they've never been here before. And I'm hoping that this company has some tricks up its sleeve, and I mean legal tricks, and that they don't panic and just start doing public offerings and reverse splits and doing all these finicky things to try to artificially boost their stock price. I hope that they just do what they set out to do their job, create the miraculous thing that they said they can do, and release that information to the public, and then organically build their stock price without stock splits. And the fact they haven't done that yet makes me happy. Now, here's the big risk that we're taking. If we jump into this company at 14 cents, it could be on its last and dying legs. And if so, they're going to probably do something to stay alive, which is only natural. It only makes sense. And if they do that, we could potentially be caught in a crazy situation. We get in at 14 cents. Next thing you know, they do a reverse split and they're diluting your shares. And now the stock price is artificially at $1.15, and who knows what happens from there. It could go up, but then it could go back down, which only doubles our problems. So there's a risk here, and I'm not going to act like it isn't. Okay, so what I'm going to do is drop that B plus down to a B because there is some risk here. All right, now let's take a look at FinViz, and I want to look here for a particular reason so we can find out what news took place over the last few days. I want to just go straight to February 28th. Okay, let's just go straight there because I feel like that is about where all the craziness happened. Within 6 months, Aptinyx, another development candidate, goes up in smokes. What? Hold on, wait. Go up in smoke? Like how? No wonder everybody ran. I really hope that this is a credible article by a credible writer, because sometimes these writers, they have stakes in, they are also in the stock market. So a lot of times they will create articles out of nothing, sometimes mostly positive articles to try to boost the stock. But then again, you have some people who are just really shifty and they try to destroy a stock for whatever reason because they're actually shorting the company. You never know. So you have to look at the stuff with a really close eye. And let's see. Okay, Aptinyx announced results from phase 2 clinical study evaluating effects in patients with cognitive impairment associated with Parkinson's disease and dementia. Across the overall study population, did not demonstrate clinical meaningful improvements. So it looks like this article is stating that one of their clinical trials did not go according to plan, and because of that, this company is not worth investing in. And I'm going to call BS on that. All right, the results do not support further development of NYX458 by the company. The phase 2 study enrolled 99 patients. How many of those 99 patients did not improve? That's the question I'm looking for, or the answer rather. All right, the study evaluated daily oral dosing of 30 milligrams, okay, across the overall study population, okay. I'm looking for numbers though. In August, okay, failed to achieve. So this company, according to this article, is not doing well or not doing what it says that it can do as it relates to fixing the problem that they've set out to fix. And I'm not sure if this article is stating that this company is like playing games, like they're saying that they can do something knowing that they cannot. And as such, they're fooling their investors? Is that what this article was saying? And by the way, when I'm done with this whole video, I'll probably go back and read that again slowly, but on my own or at my own speed. I just want to respect your time. I know this video is going to go a little bit over, but real quick, yeah, so that's a little nerve wracking, but I am going to just hold out hope and say that that's what a trial is. It's trial and error. It's trying something, getting results, looking at the data, improving your formula, and then trying again. So I'm not just going to throw this company to the wayside on the basis that they didn't do so well and they did not get the results that they want to have. So I'm not going to go that route with that particular mindset, but I'm going to pay attention to it at the same time. All right, 32% drop here. This is back in. I'm not looking at that necessarily. And as far as recent news, they signed a deal for proposed biosimilar, some type of deal they've already inked. All right. Let me see, gets FDA nod for expanded use. Stock is up. So I like the fact that the worst has already happened and that you know what they say, when you're at the bottom of the barrel, the only place to go is up. So let's keep going up, shall we? And let's look at the short percentage float. Let's see if there's anybody banking on this stock to fail. And looking at this short percentage float, it is only 0.55%. To me, that is music to my ears. There's not a lot of people sitting on the wayside. And that's even as of February 28th, the date that all the craziness happened. I am curious whether or not that number has changed because, this is really, really old data. I would like to see what the short percentage float is now. All right, next, I'm going to go ahead and take a look at CapEdge to see what the filings are or what they have been. And as we look here, we'll see bullseye. That's exactly what I expected. There was a notice given out on the 8th of December. And let's see. All right, they had some type of discrepancy with the NASDAQ. And it looks like they're going to give them how many days? 180 days, of course. They're going to give them to June 5th. So, all right, let's digest this just a little bit. First off, it sucks that they've been contacted by NASDAQ and that they have received this notice. We know that this notice can create a lot of problems for investors. Namely, the company get a little nervous and, like I said, do a reverse split, do a public offering, do anything to stay afloat and stay on the exchange because nobody wants to go over the counter. I would make that proclamation pretty soundly. I think nobody wants to go over the counter. Or this means we have time. We got a lot of time. We got time. We can get in right now at 14, 15 cents, 16 cents, 17 cents. And this company has all the way until June 5th to show that they have it. In fact, they might even have longer than that because even if they haven't satisfied the stock, the dollar stock price by June 5th, NASDAQ may not make anything or any official decisions until a month or so later. I like to think, and this is clearly just naivety at its finest, I like to hope that, that gives them a long runway to make their decisions and make some good decisions for their investors. So as we jump in right now, what is it? March 22nd, March 23rd? That's not a long, we got a long, March, April, May, June. We got about 3 months to get this thing right, to right this ship. And what I like to do is, this is between you and I like to get in when a company does have that much length of time to boost their stock price organically above $1, because what that means is you get in at 14 cents, even if it doesn't hit $1, just by way of them trying so hard, it might get up to 50 cents. It might get back to 70 cents because they're trying so hard to get it to $1. And we just kind of going on the ride, just going on the ride. You ever been like in the back of like a car or a van? You don't have to pay for the gas. You don't have to touch the radio. You don't have to do DJing. You don't got to talk to anybody. Just in the third row, just kind of going for the ride. And you're going to get there. That's kind of what this is. It's like, that, your stock price that you got in at 15 cents, 16 cents is not terrible. And you're just kind of coasting with the company as they're scrambling, trying to get above $1 before June 5th. And you're just in the back like, hey, yeah, life's good. And then if it gets up to 30 cents, you might want to, hey, you know what? I'll go ahead and get out of here. Thanks, guys, for the ride. Or, 50 cents. Thanks, guys. Or, the best thing possible can happen, which is this thing gets to $1. because they organically satisfy this requirement. And again, they have no stock splits in their history. So they don't really rely on those according to the data that I'm looking at. All right. But I don't know for sure. Someone in the comments, let me know if I missed something here, but I don't see any reverse splits or stock splits as of this moment. Sometimes it happens where someone sees it and they drop it in the comment section. I say, thank you very much, because I don't know everything. But if it does organically get to $1, how beautiful would that be if you got in under 20 cents? Think about that. All right, next, let's take a look at the rating. This is going to tell me a lot. All right, this company here has summary-based information about strengths and weaknesses. The company has a poor ESG score. That sucks. Over the last 4 months, analysts have significantly revised upwards. Good. So they're more optimistic. And for the last few months, EPS revisions have remained quite promising. I can see that. All right, the average target price set by analysts covering the stock is above current prices. I would have bet, because I think this stock is very undervalued. This is my personal opinion. The company has insufficient levels of profitability. We haven't seen the revenue yet, and that's probably something I'll check offline. And you can check and let me know if you find it and drop it in the comment section. For the last 12 months, the trend in sales revisions has been clearly going down. We saw that. All right, so a little bit of a mixed bag here. If you want my opinion, D+ according to this company, or rather this website. I want to look at another resource if you don't mind. Revenue is forecast to grow 58.18 cents per year. Revenue. That's what we're looking for. Where's the revenue information? I will find it. You find it, drop it in the comment section. All right, but anyway, we see the market cap is about 10 million, and I love this. Okay, I love this. This gives me hope. All right, has less than 1 year cash runway, highly volatile. You think it dropped 66% last month? You think it's volatile? I do. All right, makes less USD, less than 1 million in revenue. Is that true? Is that the reason why it has no revenue data on investing.com? That's terrible. Okay, I would argue so terrible that we need to drop that down to a B-. Goodness gracious. All right. I want a number. I need a solid number. Look at this. Revenue is, according to this website, is 1.4 million, and it was updated on March 7th. Goodness, look at the earnings, negative. Goodness gracious, this company has some problems. Okay, I hate to do this, guys, but I have to. I really like this company, but I can't show bias because I like the company. I got to just go off what I'm seeing. And our last stock for today for this video will be StockTwits. I would like to see what investors who are already in the company are saying. Let's take a look. And don't forget, you can always follow me on StockTwits. My username is the Ray Charles. Yeah, so check that out. Now, let's see here. Bullish. Day traders always already moving on. Okay. Just dropped the restructuring plan news already. So someone thinks they're going to have some kind of restructuring plan. I hope that doesn't include a reverse split. Maybe this investor is saying, look, you're going to have to do a reverse split. There's no way you're going to build this stock price above $1. Just drop it. Drop the news. It can't get much worse from here. Just drop it already, because you know that's what you're going to have to do. That could be a little scary for some people. I am growing to be in a space mentally where I'm okay with reverse splits. And I don't mean okay. I mean, I'm okay. I'll deal with it if it happens. If I invest in a company like this and it has a reverse split, whatever, I'm not going to sell off like I used to do back in the day. I'm going to hold on to it and just, do this right here and just pray to God himself and say, please have this company do well at some point in my life. All right. Push for 18 cents. Somebody thinks this stock can go up to 18 cents. Who knows? It wants to break out. So a lot of positivity, a lot of optimism here. I don't see a lot of negativity here. And last but not least, let's say you got in with 10,000 shares. Is that 10,000? And you got in, let's say, at 15 cents, and then you sold off at 0.50 cents. How much money would you make if that were to happen? It would cost you $1,500 to get in, but you would make a nice profit of $3,500. And let's have some real fun, shall we? Why not? Let's say it got up to $1. At that particular point, you'll make about $8,000. So definitely a lot of money to be made here. I would argue that it is a stock I'm going to invest in. I feel quite comfortable in doing so because I'm getting in so cheap, or I will be getting in so cheap. And I'm going to drop this here in the finance category, and I'm going to click create. And there it goes, ladies and gentlemen. All right. Thank you for watching. I hope that I did this particular company justice. And yes, I will be getting in. Let me know if you're going to get in as well. Let me know if I missed anything, and I'll see you on the next one. Peace.